Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday the 10th of November. I'm Daniel Lam, your host for the podcast. One of the tasks that I needed to do when I came back from my chess tournament in Malta was to approve the sector investment publication that my teammate did. And of course, I saw the stellar performance of our US sector selection in the month of October due to our overweight in the energy sector. Investors have been expressing their view of a strong showing by the Republicans at the US midterm elections, as they are more pro-carbon compared to the Democrats. Over the last 2 months, there was sharp inflow into energy stocks at more than 4% of the total AUM on the US Energy ETF, which is the largest inflow into sector ETFs across all the 11 sectors. But it turns out that the Republicans did not perform as strongly as many expected them to. So, should you be selling your US energy stocks now? Let's look at this from several angles. First of all, earnings has been strong in the US energy sector, which delivered the largest earnings surprise in the Q3 2022 earnings season across all the 11 sectors. The earnings surprise was at nearly 14%, comparing to the 5% for the broader S&P 500 index. Now, despite strong earnings outperformance, the stock price in the energy sector is still lagging those in the broader market by roughly 40%. This adds comfort to our recommendation being overweight energy sector on a 6 to 12 month horizon. What about the fundamentals? Well, the oil and gas producers have been very disciplined on cost and capex, and many of the companies use the strong earnings tailwind to pay down their debt, thus improving their balance sheets. Lastly, the macro environment is still very much inflationary, which lends tailwind to the value sectors such as energy. Oil supply is still inefficient compared to before, especially if the conflict between Russia and Ukraine were to continue over the foreseeable horizon. Hence, while there could be temporary pullback due to the relatively poor showing of the Republicans compared to expectations, US energy sector is still an overweight sector over a 6 to 12 month horizon. Looking at the US energy ETF, the support level is around $85 and then at $80. Given the strong factors that are highlighted in this podcast, these levels would be good levels to add your exposure via straight cash equities or through structured products. That's all from me today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.